Well, hello everyone. K Kim here from the Traders Club. Thank you again for tuning in. Today, obviously something we've been doing every week, and we're gonna look at the market. I'll look at Apple and Tesla. I'm gonna try to get this. I'm gonna try to get this as quickly as possible. So bear with me. You know, we've been looking at the market on a weekly basis on these midweek updates. I know last several times we did live event. And we talked about it. We've done long-term analysis. We've done intermediate-term analysis. So in this video, today's video, I'm going to only focus on more of a minor-term sentiment and what we can expect possibly. You know, today's Wednesday, so next 2 days and next week. And so let's get to it here. We'll look at Dow Jones, S&P, Russell, Nasdaq, financial sector like we do. Some of these indices, and then we'll look at Apple and Tesla. We'll end the video. Let's go to Dow Jones. Actually, I don't always closely watch Dow Jones as much as of late. I just feel like Dow Jones kind of in this disconnected, in a sense, kind of it just kind of been moving kind of on mind of its own, though it is important. So I do keep in mind, I do look at it. I mean, obviously, you know, when the major news talk about the market, Dow Jones is always there. So it's most household people would always you know, refer to what the Dow Jones is doing. So I think it is important. However, it just hasn't been effective index for somebody like us, for more of a more in-depth look to the market and give us a good reference where the market is, where the psychological level is at. So, but I'll start with the Dow Jones today. As far as looking at the Dow Jones, you know what, Dow Jones, we haven't looked at Dow Jones primary term. So let me just look at primary term first. Let me establish that foundation. Obviously, we have to keep in mind, and this is something that I always say, I always go back and say this, is that the trend is assumed to be in effect until it gives us clear signal. It gives us clear signal that it has been reversed. I know I repeat this every single week, and you must hear this because this market knows how to stir you up. This market knows impute condemnation and fear. And so because of that, we must make sure to understand that there will always be some kind of fear. There'll always be a time where, you know, the market is gonna be concerned. I mean, people are just freaking out back here. You know, you guys remember back in, what is that? You know, this is 2013 of June, you know, August, July here, in this vicinity right here. You guys remember that? I remember very, very specifically. I remember very, very clearly, vividly. I remember, you know, because I was trading here, and a lot of people are calling market top, market crash, all kinds of shenanigans, all kinds of fear. That is a huge triple top. You wanna call it a triple top? You wanna call that a head and shoulder formation? The market is bound to roll over. We had all kinds of concerns. We had all kinds of news coming out, and then what happened? We're up here. We did this after all that shenanigan. And then it came back. People are saying, okay, that was a little blip, but then, you know, we got another thing going on here, left shoulder, head, and then let me redraw that. And then they're like, okay, we got this thing going on there. We made a lower low. We got left shoulder, head, right shoulder going on. That was a little blip there. And then, you know, we're gonna have, that was a massive bull trap right here. And then this gonna just continue, you know, completely roll over. And then what happened? We're up here. This was what was happening down here. What I'm getting at is that I'm getting at I'm not saying that's exactly what's gonna happen. What I'm getting at is, please give benefit of the doubt that we're still in a primary term uptrend without a major topping pattern confirming. Yes, the market has been shaking. Yes, the market has seen a lot of volatility. S&P 500 only up 2% year to date. Dow Jones is probably much worse. Probably Dow Jones, let's see. Dow Jones is probably minus, negative. This is a New Year's Eve. Dow Jones down here, probably negative a couple percent there. But are we in a primary term uptrend? As of today, yes. And we must understand that. We must respect it. Even if it looks like, if it feels like, you know, the market whole thing is going to crash down, right? So then now we have established that fact. Let's talk about minor term. Right? So minor term, obviously we're in a downtrend in the minor term. You can see that we have a lower highs going on there, lower lows. We have been in downtrend quite some time on the Dow Jones. And so since May 2015, about 3-4 months here, we've been in a downtrend going on. So the question is, how are the minor term sentiment is going to change, right? The first things first, I think if we can get above 170, we're looking at diamond, actually, not Dow Jones index itself. We're looking at diamond, just in case you guys understand. So when I refer to the price, which is 178, I'm referring to diamond on the ETF, right? Not the Dow Jones index itself, right? I just want to clarify that this is Dow Jones index. So then if I refer to Dow Jones, it was 17,000. Do you guys understand what I'm saying? Okay, so I just like to look at diamond, spider, and Qs instead of a major index, actual index. Anyway, so looking at this, you can see that we are hitting certain level here. Obviously, we are going back. We are hitting that primary term uptrend support. It doesn't mean that just because we're hitting it, it doesn't mean that it must bounce at that level. Last week we talked about 65-minute chart bullish divergence that we're seeing on all the indices. And a lot of times, what this means is there are some clandestine buyers. You can also call them as some brave ones where they like to buy at the bottom, and so obviously that doesn't always work out. That's the reason why I don't recommend just picking bottom here. You really want to see this thing started reversing and start cultivating minor term reversal patterns, start cultivating an uptrend, and then your entry point is somewhere at that level. So, Dow Jones is concerning. Obviously, there's always concern. There's always some kind of concerning factor in this market. So it's not like just because Dow Jones is concerning, oh my God, let's get all of our money out of the market and just stay in cash. This is not the time for that. There will be time to panic. There will be time, let's get the hell out of the market and let's just see how it plays out. Right now, in my opinion, this is not the time. I think this is time to maybe be more conservative in your entries or getting new fresh positions. But I think this is time to just kind of wait it out and see what happens. Remember what I talked about? Benefit of the doubt still goes to the buyers in the intermediate and primary term in all the indices as of today. Minor term, yes, it is bearish in a minor term. That's why we have to forecast minor term, intermediate term, and primary term. So a diamond here, obviously, with that 65-minute chart bullish divergence forming here, what we need to do for this to reverse to the upside and have this minor term sentiment going back up to the bullish side is we need to get above about 177 level, and a lot of the times what you can see is something like this, what is a left shoulder head, right shoulder, which is an inverted head and shoulders pattern that can possibly make this into a minor term reversal pattern. But as of today, you can see that we had the huge bullish day here just last week or last Friday, and then we saw some momentum going. You can see that last 4 or 5 days we had the momentum, and with the today's move, that momentum is pretty much decimated. However, for the fact that we are still, let me go back to 65-minute chart. You can see that how we are still kind of in this, level or vicinity of higher low. Again, this is 65-minute chart, so in minor term there's maybe something cooking here, but really though first step will be getting above about 176 and then gap back above. So 176 will be the first step, and then 177. Right now we're found a distance right on that daily 20 EMA. You can see that kind of a light greenish color moving average there. You see this coming down, hit that resistance, hit that resistance, hit that resistance. What it means is basically that's the vicinity. There's a lot of sellers in that vicinity. It's not that everybody's looking at 20 EMA. It's just these short-term sellers have seen some success after a little bit of bump, and then they sold that. They made some success after bump, and then they sold that, and then after a little bit of and then so that's kind of why it continues to happen there. So let's see what happens here. Dow Jones is a worst looking index out of all the major ones we're going to look at. Let's go to S&P 500. S&P 500 is not as bad as Dow Jones, but the S&P 500 is still in formation of left shoulder head, right shoulder here. We've been talking about this, and we've been just kind of hanging out in this vicinity right here, and we've been hanging out here for a really, really long time. You can see since July, it's about a month now we've been hanging out there. If I go to a line chart on the S&P 500, you can see that clearly there are a lot of sellers in this vicinity, but you can also see that there are some buyers here close to that daily 200 SMA there, 200 moving average, simple moving average. So if I really, really zoom in here, what we are seeing also is that we also have this micro term inverted head and shoulder also happening. You can see that came down, went up, came down, made a lower low. However, it got up, created equal highs, came down, and then we're just right up. So we're in the vicinity of right shoulder, inverted right shoulder. We're not sure how it's gonna play out. That candle right there is basically indecision. It doesn't know what to do. Bears and bulls are kind of pretty much just tugging war here. But with the gap down, I mean, you could say maybe there's a little bit of selling pressure today. Obviously, now we're back below moving average, so there's a bit of selling pressure. Last few days does not look good for the buyers. However, we've been dealing with a very, very volatile market last month or so. We get a little bit of pop, and then it meets with sellers, and then pop again, sellers, pop, sellers. So we've been doing that. However, looking at more of an intermediate term, that's not what sellers want to see. That's not what the bears want to see. What bears want to see is just boom, bang, boom, 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 and just flush this thing down. Obviously, anything can happen in the market, but when you start just hanging out like this, the longer it hangs out, the more it favors the buyers when you're dealing with a primary term option. You see how long we've been hanging out here? We've been hanging out since February. So for about 6 months, we've just been hanging out. So this, in theory, in philosophy, this is what favors the buyers as far as the probability is concerned. I mean, we can still roll over from this point on, and this can possibly become a major topping pattern. However, again, something I always say that let's not worry about the data that is not there. Always do your analysis regarding the tangible data that is at hand. So we don't have the confirmation as of today, but when we go to like Nasdaq and financial, obviously we don't have any type of major topping pattern as of today, which is Nasdaq is looking much stronger than any other indices. So Spider, obviously, the whole market is there's a lot of concerning factor. This whole year we really haven't moved, but I'm the type of person that I still want to give benefit of the doubt to the buyers, at least intermediate term and a primary term. Minor term, we've been just zigzagging up and down volatility. However, in the intermediate term, I do want to give benefit of doubt to the buyers there. So also, you can see the 200 SMA, it has been sustaining here. We got back down to that level today. So we're just hitting that level here. So the question is, is this a lower high? Is this a higher low? Which way is that going? Is that going to continue higher, or is it going to continue lower? Nobody knows where. But what I know is this: if we can get above 210.62, I think the buyer is gonna find a lot of momentum. They're gonna find a lot of confidence in this vicinity. Below 212, above 210, I think this is where we can see a lot of public participation happening, and possibly even see enough buyers to make this market continue higher. But I do believe anywhere lower than 205. Again, we're talking about Spider here, not S&P 500 index. Keep that in mind. When anywhere below 204, 205, I think this is where a lot of sellers are lingering on. This is where sharks are lingering around. This is where they are swimming. So if we get dumped below 204, I think buyers gonna get eaten by these sharks. They're very, very hungry. So what is that gonna be? Do I have a crystal ball and just tell you this is exactly what's gonna happen? Mark my word, because I'm a prophet. That's not what I'm gonna say, because nobody knows exactly what is gonna happen. But what I can tell you is this: because we're working with the primary term uptrend, because we're seeing the Nasdaq still on a strong side, because financial sector still been strong. Yes, Dow Jones been weak. Russell still, we do have some concerning matters on Russell, but we'll look at that right after this. And because of that, I want to give slight, more benefit of doubt to the buyers. That's what I'm saying. As far as the probability is concerned, I still want to give a little bit more benefit of doubt to the buyers. Another thing I want to show you guys is this. If I go back, and this is S&P 500 spider weekly chart, right? This is a weekly chart on the S&P 500. What you're seeing, this moving average is weekly 20 SMA, right? I mean, the 2050, I always get confused with the color there. Actually, sorry about that. That's a 50. That's a 50 SMA on the weekly chart. That purple dotted moving average, that is a weekly 50 SMA, right? So what we're seeing is many times what happens is we get up, we come back, we find the support, we bounce back up, we come back down, we got to that level. And again, we're looking at primary term here, came back down, find the support, and then we went up. And then we got a steep decline, and then we got back up here, came down again, and we got back up, and we came down here. Because it has been acted as strong support. Again, this is a spider weekly chart, 50 SMA, 50 simple moving average, right? Because we're dealing with a primary term uptrend, because it has been acted as strong support, and nobody knows. And you could say, well, okay, this time is different. This time it's gonna break below that. I'd be like, how do you know? How do you know? Right? Nobody knows. There's no way of knowing that. That's what people said back here. Back in October 2014, that's what they said. This whole thing is going to, roll over. That's what they said back in November 2012. That's what they said back in May 2012. Nobody knows. So given the fact that we're still in a primary term uptrend, weekly 50 SMA still in the vicinity, which means this is why, it's not like everybody's looking at this technical moving average. It's not how this works. Most people just trade with their, instinct, with their feelings and emotions. So what they do is they went up. When they pull back certain amount, they feel like, oh, that might be a good level to buy some. It might has a good value to that. It might be stocks are cheap at that. So they bought it and went up, came down, and we had a little bit of, it's pretty similar amount of decline like we've seen back in April of 2012. So they say, I'm gonna buy back here because the last time I bought there after a certain decline, I made some money. And then every time we do that, and then we have another big decline here, and those people who bought it down here, they're like, last time I bought it and that in this vicinity, and I made some money, so I'm gonna do that again. And then they made some money, and then that's why it's happening here again. So we're at this level, and these people who bought at this level, they're wondering, and they're probably buying, saying, well, I'm going to buy it here again, see if it works out. So as of today, that has not been broken. So, and obviously, if I just zoom in here real quick, we're still throwing some dojis, right? We're throwing some dojis right here. Look at this day. I mean, looks like this thing was just ready to go to nothing. Like you see that long wick again, this being weekly chart, obviously it was sellers attempt to just completely flush this thing down, and a lot of buyers showed up here, and then just brought this thing back up. So given these facts, and I have to say, I want to stay a little bit more to the bullish side, and that's the reason why I'm not freaking out at this time that this whole thing is gonna crash down. Let's go to Russell here. Again, Russell has been making downtrend here in the intermediate to minor term. It is a concerning factor because we have formed what it looks like head and shoulder topping formation. However, Russell though, we have to really look at the big scheme of things. Because we had this massive, topping pattern that has been nullified from this, inverted head and shoulder, and then we got up, and then what we're doing is we really merely just retesting this level. This is a major pivot. There were a lot of sellers back here, and then a lot of times what pivot means is that old resistance becoming a new support. And a lot of times, if this is gonna make a huge move to the upside, that's what it likes to do. It gets a breakout and then it falls back to the prior resistance. The reason why it falls back is because it want to inflict fear. right? And then make sure all the weekends, all the newbies, all the new traders, all the undisciplined traders, right? All those people, make sure they get scared, let them get out of the way, and then a lot of times, you know what I'm saying, if it plays out perfectly, a lot of times then it wants to move with that majority, thus making only rich people richer, only seasoned traders to profit. So again, I'm not saying that that's exactly what's going to happen. That's not what I'm saying, because again, I don't have a crystal ball to tell you. You know, I don't know exactly how it's going to play out. What I can know is this: that pattern right there, concerning pattern for sure, but the location of that pattern is not such a great level. Okay, if this would have happened after, you know, after a rally and then at the top, that would have been very, very concerning, you know, pattern. But because it happening right after a nullification of this major topping pattern, and we after invert head and shoulder and breakout, because of that, I mean, it can still be topping. Anything can happen, guys. What I'm saying is, I'm talking about probability, what can actually play out. And so because of that, as long as I think we're below, you know, about 118 on the IWM, you know, above, I think this is a level that there's going to be probably could be some buyers showing up in this vicinity. However, though, again, you know, looking at today's action, it's not so hot. We still have 65 minutes of bullish divergence, though, like I talked about in all the indices. As you can see, we have that going on. So you know, that means there's some clandestine buyers, but because we're still in a, you know, bearish downtrend happening here, you can see right there, because of that, you know, minor term sentiment is bearish. Intermediate term sentiment is a neutral to bearish. This also kind of looks like a falling wedge. A lot of times a falling wedge is a bullish indicator. But you know, I guess obviously I don't really put too much weight in these wedges, because they a lot of times play out wherever it likes to play out. But you know, falling wedge typically is more of a bullish indicator. So if this is kind of gets tighter and tighter, a lot of times they break up to the upside. Kind of same thing with a rising wedge. This was more of a rising wedge there. You can see this was rising wedge. They get tighter, and then they normally break to the downside. So because it's a falling wedge, a lot of times it's you know, it has higher probability of breaking up to the upside. However, looking at the levels, 123 is a level we need to get above. If we can do that, something like this over here, I think this is when the process, this is a vicinity where buyers going to start to accumulate some confidence, and that could you know, result in continuation and cultivation of an uptrend there. But obviously right here, it is a concerning level. It's a very, very concerning level. If we get any below this level, things can get very, very hectic for the buyer. So I am not neglecting the fact that the market is a concerning level. I'm not neglecting that at all. I do believe there is a concerning factor, but what I'm saying is this: I've seen these things happening all the time like that. There's always concerning factors. There's also all kinds of people always just going panicky and just going crazy, right? And so I stick with the primary term uptrend as long as we're still in a primary term uptrend. A lot of times a buyer is going to try to work things out. Anyway, so let's go to Nasdaq here. Nasdaq is the strongest index out of them all. And then this is actually Nasdaq Composite Index that we're looking at right now. But let me go actually let me go to Qs. I actually looking at Qs and spiders and diamonds, these ETFs, when I do my analysis. So you can see there's nothing. I mean, you know, we're still in an uptrend. We're uptrend in primary term. We're uptrend intermediate term. We're continue to cultivate higher lows and higher highs, right? And just people freaking out because we're pulling back on the Nasdaq. Stop it. I mean, that's what it does, right? We get up, we pull back. We get up, we pull. When was the last time we never pulled back? Tell me, when was the last time Nasdaq just went straight up for 2 years? Never. Pulling back is very, very normal thing. So just because the market is pulling back doesn't mean you're like, oh my God, the market is pulling back. It's the end of the world. I'm gonna kill myself. Seriously, like it is a normal thing. That's what it does. That's what market does. So there's nothing on the Nasdaq. I mean, yes, can this thing just fall? Anything can happen in the market. Obviously, let's not talk nonsense, right? Let's not talk, you know, things that people wanna just. People always have this hope of winning a jackpot. Like they go to casino. Oh, I'm gonna win a $50,000. What is the probability of you winning a $50,000 $2,000 in a casino, maybe 2%. So then when you come to stock market, oh yeah, man, that's a market crash. We're gonna go to nothing. So I'm gonna make some money. So you're looking for 2% ratio or 2% probability of winning. You know, so as far as the probability is concerned, there's a higher probability on the Nasdaq that it will continue higher because the fact that, you know, we are still in a primary term, intermediate term uptrend without any kind of concerning factors. Nasdaq does not have any kind of concerning factor as of today. But because Dow Jones, Russell, you know, spiders are, you know, having certain concerning actions, that can carry over to the Nasdaq. But when we just look at Nasdaq there, it looks like, you know, completely healthy in my opinion. Financial sector is same thing. It's also looks much more like Nasdaq there. We've been just grinding higher. You can see, you know, and it hasn't moved very fast. But what it's been doing is it's been continue to cultivate higher highs and higher lows, and that's what primary term uptrend is all about. As of today, we have no major topping pattern. And a lot of times people ask me why financial sector is so important as far as the market is concerned. And if you've been following me long enough, you already know that. But back in 2007, 2008, when market crashed, this was the first time financial sector gave us the first early warning signal, right? S&P 500 is at the top here making higher highs, financial sector making lower high. That was the early signal. Obviously, that's not the only information I'm going to go by and say, oh my God, market is crashing. There were other signals, but when you have early signal, what I do is, oh my God, there's a signal, and then I start to look at other facts and then put that facts together, accumulate evidences, and say, you know what, there could be a huge market correction. That's exactly what happened. Same thing in 2011. S&P 500 started making higher highs there, and then financial sector making lower highs. That's a divergence. That's what we call divergence, right? And then we had a pretty steep correction there. Ever since then, you can see S&P 500 and financial sector has been pretty friendly, right? We haven't seen any kind of divergence. This is a reason why I want to make sure that financial sectors are healthy. I want to make sure banks are healthy, because if banks are healthy, assume that the economy, it can is healthy and continue to able to gap back up. So that's why I look at financial sector like an index. Everybody has a different philosophy. Everyone has a different theory on the market, and I'm just here to tell you what my philosophy is. And I'm not saying this is the only way to do it. I'm not saying that. But as far as my trading style is concerned, this is how I look at things. And I thought I would put out these videos on a weekly basis so you guys can get some benefit from that. Anyway, so looking at all these indices, Dow Jones are concerning. Russell is pretty much also concerning as well. Spider is pretty much kind of, Nasdaq is healthy. Financial sector. So basically, we got financial, Nasdaq healthy. We got Dow Jones and then Russell kind of concerning, and then Spider is kind of sandwiched in between. It's just pretty much moving sideways. So people are saying, are we creating some kind of major topping pattern on Spider, or is it more of a consolidation channel action? And so basically what he's saying is a buyer just resting before another thrust up higher. So that's what Spider's conveying. We don't know if it's a topping pattern. It could be just a channeling consolidation pattern, maybe accumulation before another higher. But financial sector saying we're still healthy. Nasdaq saying we're still healthy. Russell saying, you know what, primary term is concerned. We're still in a primary term, but there are certain concerning matters. Dow Jones is also saying there are some concerning matters. So you can see all these indices, they're not really condoning each other. This is another signal that there's some rotations happening. A lot of times, if you go back in history and study all these major indices, and every time when you study major market crashes and corrections, all the indices, what happens is they endorse each other. They condone each other. If the Nasdaq is weak or having some kind of concerning topping pattern, we also want to see that on Dow Jones. Also want to see that on the Russell. We also want to see that in the financial sector. We want to see some kind of divergence. All of that. But we are not seeing that. We're seeing each indices kind of like conveying different messages. You guys know what I'm talking about? And because of that, I want to give benefit of doubt to the buyers in the intermediate to primary term. In the minor term, we're bearish, yes, especially with today's move. But in the intermediate and minor primary term. When I say intermediate term, intermediate term sentiment is not going to change in a couple weeks. Intermediate term sentiment will probably change maybe in a month, or it could be 3 to 6 months. Primary term sentiment is not. Primary term, we're talking about looking at a trend since like 2009. We're talking a primary trend. So hope you guys understand what I'm saying here. Let's go to Apple. I'll go through this quickly because we pretty much did a major analysis last week. So you can go ahead and look at that last week's video. But obviously, first things first, we really still need to get above 119. We're still in the concerning level. You've got to make sure we stay above 112 and 109. Okay, this is anywhere, because there were buyers here. There were buyers willing to buy Apple below 112 because they feel that this is a level that they feel like they feel that Apple stock is value at this way. It's a value stock. Is they feel that it's cheap. Those are people are buying up. They're dip buyers, right? And so one thing also I want to let you guys know that we talked about this last week. We do have 65-minute chart bullish divergence on MACD and RSI there, and not so much in stochastic, but really what's important is the MACD. It's a pretty strong one at that as well. Again, this 65-minute chart, again, being a 65-minute chart, which is hourly chart, you know what I mean? I wouldn't put too much weight on it, but it's a tiny spark can lead to something bigger. It's a tiny spark, something lead to bigger. Also, I want to talk about this. This is Apple with the RSI and stochastic. And if I just kind of go back to 2013, and every time we hit this level, this is what we call oversold territory, right? Again, just because we're at oversold territory, it doesn't mean it's 100% guarantee that this thing is going to bounce. What I'm saying is this, it's very important. If it's going to bounce, this is a good level to do it. Okay, so let's go back here. Right here, we got to the level. We did saw a bounce. We got back here, back in June 2013. We saw a bounce here. This was September 2013. We saw a bounce at that vicinity as well. We came back down here January 2014. We saw a bounce. We came back down here back in April 2014. We saw a bounce there. We came back down here December 2014, right on the oversold status. And it took a time though. It took time. But it did bounce. And then you can see back here, July this year, we saw a bounce there, and then we got an earnings gap down, and then we're back down here. So let's talk probabilities, okay? I don't have a crystal ball. I do not know exactly what's gonna happen. Just because it happened in the past doesn't mean it has to happen today. No, it doesn't. We may not bounce this time. This time may be wrong. You be like, hey, this time is different. The thing about that statement is nobody truly knows, because they could have said it, well, this time's different here, okay? Well, this time's different here, okay? Well, this time, well, how many times can we say this time's different before it actually, don't play out? So this time, I like to give benefit of doubt to the buyer. Same thing happens to stochastic here. You can see if I just follow my arrows here, you can see that every time we get to oversold status, and this only works when we are in a primary term uptrend, guys. If we're working in a downtrend and you want to time that bounce, I do not suggest using these. Okay, do not use these oscillators to try to time a bounce in a downtrend, because we're in a primary term uptrend. It tends to work better. Okay, so we are back here. We are in the vicinity of oversold level in this oscillator. So again, my language is this. I want to give benefit of doubt to the buyers. What I'm not going to say is presume upon the market and say, mark my word, Apple is bouncing here, because I know it for sure, because I'm a stock god. I'm not going to say that, right? And I hope you guys don't say that either. So that's a positive thing there. But as far as a price action confirmed, for that to all to be substantiated, because all these different indicators and all these different signals must be substantiated by the price action. So if we start getting up above 120 there, we probably going to start to see some evidence that the oscillators are bouncing, potentially forming some kind of inverted head and shoulder there. We also do have, a 65-minute chart inverted head and shoulder, left shoulder head, right shoulder. Again, it's a vicinity. We haven't really bounced there, but if we do bounce in that vicinity, that could be at least a first step. So let's see what happens here. Obviously, we're pulling back a little bit, and we're seeing resistance kind of on that 10 EMA, because we saw sellers there, we saw sellers here, we saw sellers there. Again, these are short-term sellers. It pops, we sell. It pop, a little, and then we sell, we pop. So these got short-term sellers there. What we need is a public participation. So there's a little bit of clandestine buyers, and I think we'll probably, Apple will probably get a lot of attention once we get above 120, and then on 126 and 131. But there's a lot of work needs to be done. It probably could take up to 3 to 4 months. It might even take all year long before we get up to about 132 level there. But I still think this is a level where buyer, Apple can still turn things around, in my opinion. I still think that there's a good chance of that, though it is concerning because it has been coming down after some kind of a consolidate, that turned into some kind of a triple top formation there. But you can see after measuring this trend there, we're kind of back into Fibonacci retracement zone. So let's see if that level holds, and we'll go from there. Next we'll cover again Tesla. I'll do this really quick. I'm not in Tesla. I still think that this is not the level to engage because we're still on a downtrend here, lower highs there, lower lows. So if this thing come down and makes new low, that would continue in that fashion like this. So this is not, this is why I don't just go long right at that level, because if this thing come down, get up, and then this downtrend continues lower, and then that's what we call downtrend, right? So what I like to see is really if either it form a double bottom, I need to see some kind of a reversal, minor term reversal pattern and confirming of that before engaging. But I'm watching Tesla closely there, and I still think that if Tesla get up from this point on, then I think there's a good chance that we can get up to about 350-ish or so. But again, I need that minor term reversal pattern before I can engage there. So anyway, that's everything there. So we'll look at next week, see what happens. Well, you guys have a great night, and I'll talk to you guys soon. If you have any questions, feel free to use my blog comment section to ask any questions, or you can always email me. Talk to you guys later.